Just yesterday on the show, we were talking about when is too much capex spending too much, basically. They raised the guidance when it came to capex spending, but not by a lot. I mean, the midpoint only went up about $2 billion. That seems like small potatoes these days. Why do you think investors reacted so sharply to the capex spending, or do you think it was more about that charge?
Well, I think it's probably both, right? We all remember when Zuck was doing the metaverse, the legless metaverse. And the reality is, this is a guy who likes to spend a lot of money. And once he gets started on a project, which he certainly is right now on AI, you tend to see that it takes a while for him, one, for it to pay off, and two, for him to decide whether or not he's going to listen to the market and sort of rein it in. And right now, he's handing out billion-dollar a person pay packages. That's a lot of capex. That doesn't necessarily have a quick ROI. And then I think on the other hand, people don't like surprises, and a $16 billion surprise between friends feels big.
Yeah, that's not a good surprise. That's not a good surprise in any way. I want to go to Microsoft because honestly, I'm a bit surprised that Microsoft is lower. Pretty strong results across the board. And there was one metric that I think is really interesting when you're looking at the company's RPO, 51% higher at $392 billion. And if you read a lot of analyst notes, they believe that after the company took that 27% stake in OpenAI, there's more business that's not even factored into the RPO number. Are you surprised to see Microsoft trading lower?
No, I mean, one, Microsoft has had an amazing past couple of years. And the reality is, I think sometimes day to day, we forget that they didn't already own a large chunk of OpenAI. So that charge, I think, certainly is part of it. But I also think that we're at a point where there's a question of what does it mean to have a bunch of OpenAI? Because, the AGI does not feel like it is coming anytime soon. Letting adults be adults might be the oldest business in the world and on the internet, but I'm not sure how fruitful it's going to be for them. So I just think that there's a question of sort of, hey, all of the technical founders have pretty much left. They have their own billion-dollar startups. How much room to run is there for OpenAI, and how much bag holding is Microsoft going to do? Letting
adults be adults. That's a very nice way to put it. Even if there's not that much more runway or maybe less runway than some other companies out there, I want to hit on one number. The operating margin expanded. 48.9% this quarter, 46.6% a year ago. Doesn't that show that they're ramping up capex spending, they're implementing AI, but they're able to do it profitably?
I think that we don't know long term. I think that with AI, you have to remember that it's not sort of the linear kind of Moore's law of development cost, and so there is no real guarantee that that spending is going to go down. And I think that there's also a big question of sort of how people are reporting those numbers. Companies like AI, OpenAI, how much of their sort of R&D are they putting into some of their numbers around the cost and the margins? And so I'm not sure yet that we really fully grasp how expensive it's going to be to run some of these AI businesses, or how profitable data centers are going to be. So I'm not sure we know yet.
All right. You mentioned OpenAI. Obviously, they have their chatbot, ChatGPT, 800 million weekly users compared to Gemini with 650 million monthly users. Kind of put that in perspective for me. Is that good for Gemini compared to OpenAI, which obviously has a head start?
So I think with OpenAI, it's probably less about a head start, and it's more about, does this work? Is it reliable? And also, how do you distribute it? So the thing that Alphabet has a massive head start on with Gemini is the fact that we all tend to use their emails, their search, right? Many of us use their enterprise products, and they're baking Gemini into most of those things. And so, that I think long term is their moat. They're not in the business of raising money kind of week over week for their data centers. They have other cash coming in, they have revenue, so they don't have to go out and sort of sell that story of constant growth the same way. And I think that they're smart to kind of take it slow and steady. I personally find that Gemini often is slightly less prone to hallucinations. And I think that matters a lot, particularly for those enterprise dollars. We're seeing in general less backlash from Gemini than we do for OpenAI around some of the heavy topics too.
All right, search numbers also be a big reason for the stock being up almost 8%. One other thing I want to get your take on, because we're talking a lot about OpenAI. We've got a Reuters report that's out that OpenAI has taken some early steps for a potential IPO that could value this company at $1 trillion. The report says a filing could come as soon as the second half of 2026. Your take on this?
I mean, anything could happen, right? You could be president. Like the world's your oyster, right? I think the real question is once they actually have to start talking to the bankers about an IPO, really looking at a roadshow. They have an amazing CFO over there, but once they have to start sharing more about their hard numbers, is that going to scare the market a little bit? And then also, is the retail investor really going to have a massive appetite for this company that isn't profitable, that doesn't have sort of groundbreaking, doesn't feel as fresh and groundbreaking of technology at a valuation that is 20% of the valuation of the biggest company in the world? I think those are big questions, and I'm not sure how OpenAI is going to answer them.